All right, traders, we're back with the second trading opportunity of the day. Basically, we're heading back to the euro pound. We've been here, I think it was about 4 or 5 days ago. And I was basically calling out a new bearish opportunity. And I was also, of course, explaining the reasons behind that bearish conviction that we decided to take on. Now, you probably remember the big picture is extremely sound, strong, in terms of the setup, right? The setup itself, because we noticed the price on the way up grabbed both of the previous highs. Take a look, by a very, very small margin. But guys, take a look at what happened once it did, right? It completely capitulated and began to drop like a stone. And it managed to cross back below 90.68. I mean, we still have a few more days to go to the end of the month. We definitely want to have that monthly close below 90.68. That would mean, that would speak volumes. That would mean that there's a very good chance that we're going to have here a full-fledged downside reversal. And that's pretty much what we're trying to play out here. Basically, we got in early, like we usually do, right? We kind of we're risk takers, and we like to get in even before the actual trigger level is getting triggered. And at this point, guys, we decided to take up on this bearish position even before we had that monthly close confirmation breakdown, because we had a different technical element, let's call it that way. And I'm talking about that head and shoulders pattern that we noticed was starting to develop, actually coming from the 4-hour chart, not even the daily chart. Let me take you there, guys. It's really interesting stuff. So you probably remember we talked about it, that it's a very valid, very valid head and shoulders pattern, because we have these shallow shoulders in comparison to a very large head, right? And that's the kind of reversal pattern, head and shoulders patterns that we like to see. So we noticed that breakdown over that neckline. That was very intense. In a single bar that represents here 4 hours, by the way, of course, it crashed down on that neckline. But guess what, guys? This is the really interesting part here. It went straight to that blue dotted line. Now, guess what that blue dotted line stands for? So I'm going to tell you, right? That blue dotted line obviously is the first Fibonacci projection 1.236, 123.6% off the head. That's what we always do when we have a head and shoulders pattern that begins to break, right? To break away. So we measure the head, and we know the first target we should be looking at is that 1.236. Take a look at this really lovely reaction coming from price, guys. Amazing landing right on top of that key level. And of course, we've seen what happened, right? Price turned around and began to change direction, but not for long. I mean, take a look where it reached. On its way up, it was able to overcome that 90.68 again, but it couldn't handle that neckline, this time from below. That neckline, which by now turned into a resistance, has been pushing back on price. And lo and behold, it's been successful to push price back on the downside. And price basically went straight and crossed. This time it actually crossed that blue dotted line, that 1.236 Fibonacci projection. But it's just a daily price action at this point, right? We know how the daily could be noisy. So we want to make sure price remains below that blue dotted line. Now you can already see we've been pushing 2 trades on this short position that we have. So we just increased the position slightly. But before we're going to move on and further increase our position here, we want to make sure price remains below that blue dotted line, which, by the way, is right at 90.35, 0.9035. Now I'm going to give you a bit of a snapshot on that weekly chart. Guys, this is what we find encouraging, right? So take a look at the close last week. Talking about the previous bar. Take a look at the close, 90.66, which is 2 pip just 2 pip below 90.68 here, maybe 3 because it's almost 90.69, but it's still very, very tight. But we feel that, you know, it might have been a genuine breakdown, so we'll have to wait and see. But for now, things are looking pretty good. Let's just hope it's going to be sustainable. We haven't done anything with our stop loss level still in its initial placement 92.50. Only once we have that monthly confirmation, we'll begin to adjust the stop loss level accordingly. That's about that for the Euro Pound, guys. I hope you enjoyed that session. Have a nice trading day, and we'll see you tomorrow.